Welcome to Crypto Updates. I'm Sarah and with me is Alex. A quick note before we begin, please show your support by liking this video, hitting the notification bell and subscribing to our channel. We appreciate it.
Alright, let's delve into a topic that, while seeming specific, carries immense weight for the future of global finance: the synergy between XRP and the Philippines. This isn't just an itch story. It has profound global implications. We're examining how the digital asset XRP is fundamentally revolutionizing cross-border payments in this key nation.
It's an absolutely compelling case study. The unique economic landscape of the Philippines has positioned it as the premier testing environment for XRP's real-world utility. We're witnessing a genuine paradigm shift in how money moves across borders, moving far beyond theoretical concepts and into tangible, everyday application.
So our objective today is to explore the surprising, yet logical, reasons why the Philippines has emerged as such a powerhouse for XRP adoption. We'll pinpoint the specific projects making this transformation happen on the ground right now.
And most importantly, we'll analyze what this all means for you, our listeners, and for the broader digital asset space. Prepare for some significant insights as we unpack the layers of this story. Let's start with the fundamental question. Why the Philippines? What makes this nation so pivotal to this entire narrative?
It all comes down to one word: remittances. The numbers associated with remittances flowing into the Philippines are simply staggering.
They truly are. The Philippines holds the impressive title of the world's third-largest remittance market. In 2024 alone, the country processed a mind-boggling $162.3 billion in these transfers.
And to put that number into perspective, that incredible flow of capital represents roughly 10% of the country's entire gross domestic product (GDP. It's not just a part of their economy. It's an indispensable pillar of support for countless households.
10% of GDP is huge. That means a massive portion of the national economy is directly linked to these transfers. And this trend isn't slowing down, is it?
Not at all. In fact, projections show the market is expected to surge to $203.7 billion by 2023.
Wow, and just recently, in January 2025, personal remittances hit $3.24 billion, marking a steady 2.9% increase year-over-year.
And remember, these aren't just abstract statistics. This is about millions of families depending on this income for essential needs like food, education, and healthcare, the building blocks for a better future.
So, given this consistent, enormous, and deeply personal demand for better ways to send money home, what are the challenges with the traditional methods that make this process so painful for them?
It's a double-edged sword: cost and time. Historically, conventional remittance methods have burdened families with fees ranging anywhere from 6.8% to a staggering 8.5% of the amount sent. Imagine sending $500 home and losing over $40 just to fees.
That's a significant cut. And what about the time factor?
On top of the cost, settlement times could stretch from 24 hours to sometimes 72 hours. That's days of waiting for funds that are often urgently needed. This isn't just an inconvenience. It's a significant burden that eats into hard-earned cash and delays vital support.
Okay, and this is where XRP's technology, specifically On-Demand Liquidity or ODL, becomes the hero of the story, right? How does it swoop in and solve these exact problems?
Precisely. The contrast with XRP is stark. ODL flips the script. Instead of those high fees, XRP transaction fees are typically around 0.00001 XRP, which is effectively negligible, a tiny fraction of a penny.
So the cost problem is virtually eliminated, but the real game changer is the ODL technology itself.
Exactly. ODL leverages XRP as an intermediary asset, a bridge currency. This allows financial institutions to send money internationally without needing to pre-fund accounts in the destination currency. That old system tears up billions in trapped capital globally and exposes institutions to foreign exchange volatility risk, hidden costs that ultimately get passed to the consumer.
And by using XRP as that bridge, the settlement time is drastically reduced.
Drastically, the XRP ledger processes transactions in just 3 to 5 seconds, not days, so settlement times are slashed from days down to mere seconds. This efficiency translates directly into huge cost savings and, just as importantly, far greater speed for Filipino families.
That real-time aspect sounds like a superpower for cross-border payments. So, let's get concrete. Who are the big players actually implementing this in the Philippines?
The most significant flagship implementation began back in 2021. That's when SBI Remit, a major Japanese money transfer service, became the first to fully integrate XRP as a bridge currency for sending money to the Philippines using Ripple's ODL. It was a genuinely pioneering move.
And they didn't stop there, right? They expanded, which shows real confidence in the system.
Yes, demonstrating scalability and trust in the tech. In September 2025, SBI expanded its XRP-powered services to include bank accounts in Vietnam and Indonesia. His setup uses SBI IVC Trade for the initial XRP part and then partners with Malaysia-based Tranglo to handle the conversion into local currencies like the peso or rupiah.
Tranglo, I've heard of them.
And Tranglo has now processed over $11.81 billion in cumulative value using ODL since they adopted it.
11 billion, that's an astonishing scale of value being moved. What about on the local end? Inside the Philippines itself, how do people actually get the money?
That's where Coins.ph is absolutely crucial. They are the Philippines' leading fully regulated crypto exchange and they boast over 16 million users. They are the vital on-ramp that allows Filipinos to receive these XRP-powered remittances directly into their digital wallets, giving them instant access to funds 24/7. They're a critical financial gateway for millions.
And there are other players too, which suggests a healthy, growing ecosystem.
Absolutely. You have iRemit, a non-bank remittance provider that has been using Ripple's ODL since way back in 2018. They were very early adopters and significantly expanded their partnership in 2024 specifically for treasury payments, giving institutions 24/7 liquidity access.
And others?
Then there's SendFriend, a startup actually backed by Ripple, which is specifically using ODL to target remittance fees as low as 2%, and you even see it at the user level. Xumm, a popular wallet for the XRP ledger, sees the Philippines as one of its absolute top markets globally, with over 41,000 active users.
Okay, this all sounds incredibly efficient and tech-forward. But what about the rules? The regulatory side, is the Philippines just some kind of crypto Wild West, or are there actual, clear regulations supporting all this innovation?
Far from the Wild West. In fact, the Bangko Sentral ng Pilipinas (BSP), the central bank, has established what many consider one of the world's most progressive regulatory frameworks for virtual assets. Their pragmatic approach is fascinating. They've carefully balanced the need for innovation with robust consumer protection and overall financial stability.
How have they done that specifically?
Key regulations like BSP Circular Number 944 from 2017 and Number 1108 from 2021 created a comprehensive framework for virtual asset service providers (VASPs). This framework mandates everything from strict registration to robust anti-money laundering AML controls, tough cybersecurity standards, and even minimum capital requirements for companies in the space.
And importantly, they've diligently aligned their rules with the Financial Action Task Force FATF guidelines.
Yes, which are the premier international standards. This provides clarity and builds trust for both local and international players looking to operate there. And the BSP hasn't stopped. They've completed testing for Project Agila, their pilot for a wholesale central bank digital currency (CBD), and just in May 2024, Coins.ph got BSP approval to pilot a Philippine peso-backed stablecoin called PPAH in their special regulatory sandbox.
So this proactive stance really sets the Philippines apart.
It does. It shows their commitment to exploring all forms of digital currency innovation in a controlled, safe way.
Okay, so let's bring this back to our listener. What does all this mean if you're an XRP holder? Maybe sitting in the US or Europe. Why should you care about what's happening in Southeast Asia?
If we connect this to the bigger picture, the Philippines represents a critical piece of Ripple's overall Asia-Pacific strategy. That region accounts for roughly 40% of Ripple's entire global payment flow.
40%, that's an enormous piece of their business.
It's huge, and consider Japanese projected adoption. We are expecting something like 80% of its banks to be using XRP by 2025. Now combine that success in Japan with the robust, efficient infrastructure in the Philippines, and it creates an incredibly powerful network effect.
So the Philippines serves as a key destination market, creating a two-way street of innovation.
Exactly. The success and regulatory clarity we're seeing in the Philippines effectively acts as a template, a proof of concept for broader global adoption. It demonstrates XRP's viability and efficiency for other massive remittance corridors like Mexico, India to the Gulf states, or various emerging markets in Africa.
So, far from being irrelevant to global holders, what's happening in the Philippines is actually a cornerstone of global expansion. It's demonstrating XRP's foundational role in reshaping how money moves.
You've nailed it. The sustained success of the Philippine implementation directly benefits the entire global XRP ecosystem. It's not just showing potential anymore. It's demonstrating real-world utility day in and day out at an enterprise scale, and that provides crucial institutional validation for banks and payment providers everywhere, which helps chip away at any lingering doubts about XRP's practical application in the real financial world.
It truly is a compelling example of how massive real-world need, innovative technology, and forward-thinking regulation can converge to create a blueprint for the future of global finance, empowering millions of people in the process.
It really does, and it raises the important question: if digital assets like XRP can so dramatically improve something as essential as sending money home, what other parts of our global financial system, trade finance, supply chain payments, even microlending, are ripe for a similar transformation? And how quickly will we see these changes unfold globally?
Drop your comments below and subscribe to our channel, Alex and our personas, to make content more engaging and relatable, not legal or financial advice. Please do your own research before making any investment decisions. We'll see you next time.